Hello everybody, welcome to The Book Club. Today we are going to see the summary of the book, The Intelligent Investor. The Intelligent Investor is a book written by Benjamin Graham, considered the father of value investing, first published in 1949. It is widely regarded as one of the most important books on investing ever written and has influenced countless investors and investment professionals. The Intelligent Investor has 20 chapters as follows. Chapter 1. Investment versus speculation. In this chapter, Graham distinguishes between investment and speculation, emphasizing the importance of investing in companies with strong fundamentals and a margin of safety. He introduces the idea of value investing, which involves buying stocks at a discount to their intrinsic value. Chapter 2. The Investor and Inflation. Graham discusses the impact of inflation on investment returns, highlighting the importance of selecting stocks with earnings power that can increase over time to keep up with inflation. He also advises against trying to time the market to avoid inflation, which is difficult and often counterproductive. Chapter 3. A Century of Stock Market History. This chapter reviews the performance of the stock market over the past century, highlighting the long-term upward trend despite occasional downturns. Graham emphasizes the importance of focusing on the long term and not being swayed by short-term market fluctuations. Chapter 4. The Defensive Investor and Common Stocks. Graham introduces the concept of a defensive investor, someone who seeks to preserve capital and generate modest returns without taking excessive risks. He explains that a defensive investor should focus on large, well-established companies with a long track record of stable earnings and dividends. Chapter 5. The Defensive Investor and Bonds. In this chapter, Graham discusses the role of bonds in a defensive investor's portfolio, highlighting their ability to provide a reliable source of income and stability. He emphasizes the importance of analyzing the creditworthiness of the bond issuer and selecting bonds with an appropriate maturity and yield. Chapter 6. The Defensive Investor and Market Fluctuations. Graham emphasizes the importance of discipline in sticking to a sound investment strategy, even during times of market turbulence. He suggests that defensive investors should rebalance their portfolio periodically to maintain an appropriate asset allocation. Chapter 7. Mr. Market and the Stock Market. Graham introduces the concept of Mr. Market, a hypothetical investor who is prone to emotional swings and can cause the market to be irrationally optimistic or pessimistic. He advises investors to use Mr. Market's mood swings to their advantage by buying stocks when they are undervalued and selling when they are overvalued. Chapter 8. The Investor and Market Fluctuations. Graham expands on the idea of market fluctuations, discussing the role of psychology and emotions in driving market movements. He emphasizes the importance of avoiding emotional decision-making and sticking to a rational investment strategy. Chapter 9. Investment versus Speculation. Results to be expected by the intelligent investor. Graham reiterates the distinction between investment and speculation, highlighting the long-term benefits of value investing. He argues that value investing can produce superior returns over the long term, but that investors must be patient and disciplined. Chapter 10. The Investor and His Advisors. Graham discusses the role of investment advisors and brokers, emphasizing the importance of selecting advisors who are aligned with the investor's goals and have a proven track record of success. Chapter 11. Security Analysis for the Lay Investor. Graham introduces the concept of security analysis, which involves analyzing a company's financial statements and other data to determine its intrinsic value. He provides an overview of the different tools and techniques that investors can use to evaluate stocks and bonds. Chapter 12. Dividend Investing. Graham discusses the role of dividends in a well-diversified investment portfolio, highlighting their ability to provide a steady stream of income and mitigate the impact of market fluctuations. He advises investors to focus on companies with a long history of stable dividends. Chapter 13. When to buy and when to sell. Graham provides guidance on when to buy and sell investments, highlighting the importance of buying at a discount to intrinsic value and selling when a stock becomes overvalued. He emphasizes the importance of avoiding emotional decision-making and sticking to a rational investment strategy. Chapter 14. The Investor and His Income. In this chapter, Graham discusses the importance of generating a reliable stream of income from investments. He highlights the advantages of dividend-paying stocks and bonds as sources of income and provides guidance on selecting investments that can provide a steady stream of income. Chapter 15. The Defensive Investor and Common Stocks, Continued. Graham provides additional guidance on investing in common stocks as a defensive investor, emphasizing the importance of diversification and focusing on large, well-established companies with stable earnings and dividends. Chapter 16. Portfolio Policy for the Enterprising Investor. Negative Approach. Graham provides guidance for enterprising investors who are willing to take on more risk in pursuit of higher returns. He advises investors to focus on a negative approach, which involves avoiding companies with poor financials, high valuations, or questionable management practices. Chapter 17. The Investor and Market Fluctuations, Continued. Graham discusses the impact of market fluctuations on investor psychology and behavior, emphasizing the importance of avoiding emotional decision-making and sticking to a rational investment strategy. He provides guidance on how to maintain a disciplined approach to investing during times of market turbulence. Chapter 18. Investing in Investment Funds. Graham discusses the advantages and disadvantages of investing in investment funds, such as mutual funds and exchange-traded funds, ETFs. He provides guidance on selecting investment funds that are aligned with the investor's goals and have a proven track record of success. Chapter 19. The Investor and Taxation. Graham provides guidance on how to minimize the impact of taxes on investment returns, highlighting the advantages of tax-deferred investment accounts, such as individual retirement accounts, IRAs, and 401k plans. He also provides guidance on selecting tax-efficient investments. Chapter 20. Practical Portfolio Policy for the Enterprising Investor. In this final chapter, Graham provides practical guidance on portfolio management for enterprising investors. He emphasizes the importance of maintaining a well-diversified portfolio, focusing on undervalued companies with strong fundamentals, and avoiding speculative investments. Hope you people enjoyed the video. Please find the buying link in the description. Please like, share and subscribe to be notified. Happy reading!